Welcome to the Deep Dive. We're here to cut through the noise and give you the essential insights. Today, we're digging into Bajaj Healthcare Ltd. Specifically, their Q1 results for fiscal year 26 ended June 30th, 2025. Our goal, to really give you a clear picture of how they're doing, their strategy, and importantly, how they're using that money they raised recently. We'll pull from their press release, board meeting notes, and that monitoring agency report. So Bajaj Healthcare, they've been around since '93, big player in APIs, intermediates, formulations, globally, and the big headline. A massive 66% jump in profit after tax, PAT, and a 12.5% rise in revenue from operations for the quarter. That profit number really catches the eye. Okay, let's get into it. What were the main financial takeaways for Q1, especially compared to last year?
Right. Well, what's really interesting, as you said, is that big profit jump, especially since revenue actually dipped slightly compared to the last quarter, Q4. It makes you ask, okay, where's this extra profit coming from? So the specifics. Revenue from operations was ours, 1,488.4 million. That's up 12.5% from Q1 last year, which was ours, 1,322.5 million. But like I said, down a little, about 3.6% from Q4 FY25's ours, 1,544.7 million, just a small dip there. Now the PAT, profit after tax, that hit ours, 118.3 million. That's the huge 65.9% year-on-year growth from ours, 71.3 million. It's also up 5.9% from the previous quarter, Q4, which was ours, 111.8 million. So good momentum there. EBITDA, earnings before interest, taxes, depreciation, amortization landed at ours, 253.9 million. Pretty much flat, up only a more 0.1% year-on-year. The EBITDA margin was 17.0% for Q1. It's better than the 15.1% in Q4, sequentially better, but down from 19.1% in Q1 last year. And finally, the PAT margin profit as a percentage of revenue came in at 7.9%. That's a solid improvement from 5.4% same time last year, and also up from 6.7% last quarter.
Okay, so revenue up year on year, profit way up year on year, and even quarter on quarter. But EBITDA basically flat year on year. Interesting dynamics. That really leads to the how. What's the strategy behind these numbers? Mr. Anil Jain, the MD, commented on this, right? What was his take?
Yeah, he did. He acknowledged it's been a, quote, challenging pricing environment in certain segments, but he still called it a strong and promising start. He basically put the improved profitability, especially the PAT growth, down to sharper execution across business segments. That was his phrase. And he explained that the steady EBITDA, even with input cost pressures and the better margins compared to Q4, reflect a better product mix and improved operating leverage.
Better product mix, sharper execution.
Yeah.
Okay, so digging deeper then, where exactly did they execute better? Which segments drove this growth? Let's break down the revenue sources.
This is where you really see the strategic shift playing out. The absolute standout was API exports. That segment grew, get this, at 68.4% year on year, reached ours 521.9 million. They said this was driven by growing demand in regulated markets, places like Europe, and crucially, the ramp up of their commercial CDMO supplies.
The contract development and manufacturing.
Exactly.
Yeah.
And formulations did well too, up 41.1% year on year to ours, 240.5 million. They put that down to deeper market penetration, new partnerships. But on the flip side, API domestic actually declined. It was down 13.8% year on year to ours, 726.0 million.
Okay, what was that?
They pointed directly to pricing headwinds in the domestic market, and in response, they mentioned they've, quote, strategically realigned its portfolio. So you look at the big picture, exports now make up 35% of their total revenue. Last year it was only 23%. That's a pretty clear pivot, right? Moving towards potentially higher margin exports, CDMO.
So 5% up from 23. Yeah, that's a significant shift away from the domestic API headwinds. Makes sense.
And supporting this, they also highlighted some regulatory wins. They got 3 new CEP approvals and 1 ASMF approval from European authorities.
CEPs, those are like the quality passports for Europe, right?
Exactly. Certificates of suitability, plus the active substance master file. These really help strengthen their position in the EU and UK. They've also started validation batch supplies for some new molecules under those CDMO deals we mentioned. And they filed 5 DMS drug master files with the UK's MHRA. That's groundwork for future sales there. Overall, they filed 9 CEPs, 7 are approved, 4 more are cooking. They also touched on their CNS pipeline's central nervous system drugs. Sinobame got a positive nod from the expert committee, just waiting on the final DCGI approval here in India for phase 3 trials. And Magcane, another product, validation batches are running, aiming for a commercial launch in Q3. So progress on the product front too.
Okay, lots happening on the regulatory and pipeline side. And you mentioned backward integration earlier. How does that fit into this picture, especially with CDMO and formulation scaling up?
Right, backward integration. They called it a cornerstone strategy. It's basically about making more of their own key starting materials or intermediates in-house. This gives them much better control over their supply chain, quality, and critically costs. It directly helps with that improved operating leverage Mr. Jane mentioned. It essentially supports their ability to scale up these newer, perhaps more complex CDMO and formulation projects reliably and profitably.
Got it. Control the inputs to manage the outputs and margins. Okay, let's switch gears a bit. Besides the Q1 results, we also have this monitoring agency report. This report tracks the money they raised through that preferential issue. For you listening, this is about financial plumbing, understanding how they're using capital. So what was the deal with this issue?
Okay, so this was a preferential issue involving both equity shares and convertible warrants. The total target was initially up to Rs 207 crore, but it ended up being slightly undersubscribed. So the expected proceeds were actually Rs 204.97 crore. The issue period was between August and September 2024. Now, as of June 30th, 2025, the company had actually received Rs 152.26 crore.
Okay, about 3/4 of the total expected amount.
That's right. It represents 100% payment for the equity shares that were subscribed, plus the initial 25% payment required for the convertible warrants. So there's still Rs 52.71 crore outstanding. That's the remaining 75% on the warrants. And that's due within 18 months from the allotment date, which was September 19, 2024.
Right, so they got the 152 crores in hand. What was the plan for that money? And according to the monitor, where has it actually gone so far? Did they stick to the plan?
Mostly, yes. The report breaks down the utilization of that Rs 152.25 crore received. The biggest chunk by far, Rs 150 crore, was earmarked for repayment and prepayment of secured, unsecured loans. And the report confirms this was fully utilized very quickly by September 27, 2024. So that objective is marked completed, no delays. They paid down debt right away.
Okay, 150 million straight to debt reduction. What about the rest?
Well, Rs 35 crore was allocated for investment in capital expenditure CapEx, but the report notes nil utilization during the quarter, meaning Q1 FY26, from these specific funds. So that objective is still marked ongoing.
No spend on CapEx from this pot during the quarter. Interesting.
And the third bucket was general corporate purpose, or GCP. Originally, it was Rs 22 crore allocated. But because the issue was undersubscribed, meaning they raised slightly less overall, this GCP allocation was adjusted down to Rs 19.97 crore. Of that, Rs 2.25 crore has been utilized in total since the funds came in. But again, the report states nil utilization during the quarter for Q1 FY26. So this one's also ongoing.
So both CapEx and GCP saw no spending from these particular funds in Q1. Does that mean anything? Maybe delays or just timing? And you flagged something about the GCP definition changing. That sounds noteworthy.
It could just be timing, especially for CapEx, which often happens in phases. It doesn't necessarily mean a delay, but it's something to keep an eye on. And yes, the GCP definition change is quite interesting. Back in Q2 of FY25, so the quarter ending September 2024, they used Rs 2.25 crore from the GCP funds to repay an unsecured loan taken from a promoter. Now, the original definition of GCP in the offer document didn't explicitly cover that specific use case. So, to ensure everything was above board and transparent, the board and the audit committee formally modified the definition of GCP on November 14th, 2024. They specifically added wording to include repayment of unsecured loan taken for funding of working capital requirements.
Okay. So they used the money, realized it wasn't perfectly aligned with the original fine print, and then formally updated the definition to match the action.
Exactly. It shows a level of procedural correctness and transparency, which is generally seen as a positive thing in corporate governance, adjusting the definition to reflect reality rather than, trying to obscure it.
Right. So wrapping this up for you, our listener, it seems Bajaj Healthcare had a strong quarter financially, especially on the profit line. This was driven by some clear strategic shifts, leaning into API exports and CDMO, navigating domestic issues. They're also making progress on the regulatory front and seem to be managing the capital they raised quite deliberately, focusing heavily on debt reduction first.
Yeah, it's a picture of adaptation, really. And maybe a final thought to leave you with.
Yeah.
Looking ahead, the big question is how that remaining Rs 52.71 crore from the warrants will be used when it comes in. And what will the impact of that CapEx be when they do start spending it? Will this export and CDMO momentum be enough to keep offsetting those domestic headwinds? How will this realignment truly reshape their place in the market over the next year or so? Lots to watch.
Indeed. Plenty of moving parts and strategic plays unfolding. Thanks for joining us for this deep dive into Bajaj Healthcare. Hopefully this gives you a much clearer picture.